Hello, good morning, all of you. Uh, I hope you are enjoying this. You are interested to know more about real estate. Uh, how much time we have, like for me? I can go into hours and minutes.
20 minutes.
So, okay, so before I start, I want to know all of you are have you guys owned real estate? All of you owns real estate? How many owns investment properties, rental properties? How many are looking to buy a brand new home? How many have property in India? Yeah, a lot of people have properties in India. That's a very common question that happens. We are doing the Wealth Summit. This is a Wealth Summit we are having. We are doing Wealth Summit for last 10 years. This Wealth Summit is happening on December 10th in Oasis, New York. We always get 500 people, 500 plus people there. So we cover not only the tax part, we cover the financial planning, we cover the estate planning. I think state planning attorney is there. You can come. State planning attorney is here, so he's also going to be part of the speaker at the Wealth Summit.
Thank you, Sanjiv. My name is Snehal Patil. I am managing partner of Indus Council. I will be speaking a little later on estate planning and especially for this audience about real estate also. And obviously, like Sanjiv said, I'll also be at the Wealth Summit.
Thank you, Snehal. So you will have financial planner, state planning attorney, we have immigration attorney there, we have a realtor, real estate related stuff there, we have a corporate attorney, we have a life insurance person, we have a lot of people there, a lot of speakers there. So it's a full day event, full of information and networking. And if you want to start some business on the side, which is very important, how many of you are on W2? Mostly. How many of you are real estate professional? You understand the real estate professional? Real estate professional means who's buying and selling real estate and putting more than 750 hours. You heard the real estate? Because they make the money, they save the taxes the most. Real estate professional, like you know, our ex-president Trump, right? He pays no taxes. Why? Because of real estate losses and being a real estate professional. So that's important. So let me start. So the first thing that we have to, when we buy a home, what benefits are we getting? And how does this work? So when you buy a home, you get deduction in terms of mortgage interest. And what the deduction does, it lowers your income. And what is the income? Income coming from different sources. It can be W2, it can be capital gains, it can be interest income, it can be foreign income. So it's a part of the itemized deductions which lowers your taxable income. So that's the first benefit. If you don't buy the real estate, you will not get mortgage deduction. That means you get a standard deduction. And standard deduction is, if you are married filing joint, is 24,000. But single is 12,000. But you know, the house in the Bay Area or any part of the California is at least 1 million plus. Mortgage interest on that is at least 30 to 40K. So that will push you above that limit. And once that push you above the limit, it helps you lower your taxable income. But there is a limit on the loan, which we are going to cover that shortly also. Mortgage interest I was talking about. So there's a limit on this loan amount. Loan amount is up to $750,000. If the loan amount is more than 750K, the interest on the excess amount is not allowed. Interest up to 750K is allowed as a deduction. Is there any workaround for that? Of course, there are a lot of workarounds. You can use that as a home office. You can borrow money against that property and put in another investment property. Sorry, let me. Question? Let me finish it and we'll ask some questions. Okay. So mortgage interest, the loan amount is very important, and I'm saying this, that's the one reason why people buy real estate is mortgage interest. Property taxes was there, but with the Tax Cuts and Jobs Act, President Trump, what he did, he did not like New York, he did not like New York State, he doesn't like California State. And these two states pay the taxes the most, the real estate taxes. First thing he did, no more deduction for real estate taxes. He bunched together the real estate property taxes with state tax withholding. And state tax withholding, you know, in California, everybody is paying state taxes at least 30K, minimum. It can go to 50K, it can go to 70K. And property taxes, 1.12% in certain counties. In certain counties, 1.25%. On a value of 1 million, it's at least 15 to 18,000. And it can go up to 40,000, can go to 50,000, can go to 100,000 too. So you lose such a valuable deductions on the property taxes because they're clubbing that with the withholding taxes, with the state tax withholding. It's up to 10,000. So there's a bracket of state tax withholding and property taxes not exceeding 10,000. What happens to the excess? You don't get anything. Is a workaround? Of course. We can look into that. How to maximize. Again, home office is one of the area where we always look into, we always tell the client, do some kind of side business. Make that home as an office, not as an employee working at home. That is not allowed. Employee working at home does not make anything. Doing a business changes everything. Okay, changes everything. Then we have private mortgage insurance, PMI we call it, is also important deduction. But again, the AGI is too less. Only up to $100,000. So if your AGI is more than $100,000, whatever you're paying on PMI is not deductible. So I will not cover this much. Home office, I keep saying about home office. Like I said, you should look at starting some kind of business, maybe consulting, maybe product development. How many of you are in IT? Yes, that's, how many of you are on H1B? Yeah. You got the EAD or just on H1?
H1.
H1. EAD also is there, right? Status where you can do your business too. If you get EAD, you can do business. If you're H1, of course you cannot do business. So, what kind of business? I told you, like product development, software development. It can be a franchise model. You can buy a franchise, UPS store, gas stations. All these things are there. Your friend might be in business. You want to invest with a friend. And what it happens is, you become an investor with that friend in a business. And when you become an investor with a friend in a business, it's a business deduction. Now remember, real estate is passive and active. What do you mean by passive? Passive means you don't do anything to make income. The real estate makes you income. Real estate is doing something to make you income. So that means if you're not putting hours into it, it becomes passive. And what's the disadvantage of passive? Whatever losses you have from renting a real estate. So when you rent a real estate, when you own a real estate and you rent it out, you get rental income, then you can deduct the expenses, right? You can deduct all kinds of rental expenses, mortgage interest, property tax payment. Property tax is fully allowed there. Mortgage interest is fully allowed there. There's no limit. There's no limit. So repairs and maintenance is allowed, cleaning and maintenance, automobile expense, car expense, going to the property, seeing the property. That is also allowed. If you have property in India, even traveling to India is also deduction. But it has to be substantiated. Means when you go to a property in India, when you go to India, make sure you visit the property and take a picture. So you can claim that as a travel expense. But not the entire family, not self, spouse and kids. No. You have to be reasonable. You don't want to throw, you don't want to be under the IRS scanner. But you should do whatever is required to be done. Okay? So if you are, so when we talk about active and passive, We also talk about real estate professional versus non-real estate professional. Who is real estate professional? Real estate professional is a person who passes the exam, real estate exam, but also performs 750 hours or more in a year. We know in a year is 2,000 hours. 1/3 of that is 750. If you put that time, including your spouse, 750 hours includes your spouse. So whatever time you spend with your spouse, you make a logbook of the hours. Once you make a logbook of the hours, and it's more than 750, you become a real estate professional. And like I said, when you become a real estate professional, one item which is very important that reduces the taxes is a depreciation. What is depreciation? Depreciation is lowering the value of your property for constant use over a period of time. And depreciation is calculated how? So real estate has two components. One is residential, and another is commercial. What is residential? Residential can be primary home, can be rental property. Type of that can be single family home, can be condominium, can be multi-unit, residential unit, right? So those are townhomes. Those are those are residential units. What about commercial? Commercial can be warehouses, industrial warehouses, office building, commercial building, and we all should look into that area also. We just don't want to buy a residential, but we should look into commercial also from tax point of view. Okay, that's important area we ignore. So when you have that real estate and you are putting more than 750 hours, it becomes a real estate professional. And you take advantage of depreciation. That depreciation lowers your taxes by considered amount. It is for residential, you take 3% to 4% of the value of the building, not the land, as a depreciation. That lowers your rental income, and depreciation is a paper expense. You're not doing anything to get that expense. It's a paper expense. So it gives money in your pocket. That's why real estate is very important, because it generates tax-free income. It creates tax-free income. If you're not a real estate professional, what should you do? If you're not a real estate professional, then we have a concept known as short-term rental. Short-term rental is very important. It has become very important for the last few years. Airbnb and all those things are there. There are certain rules there, which we'll cover there shortly. Then we have a tax break for medically if you have somebody in your family who is disabled or has handicap and you want to extend, you can also claim that deduction on the improvements. Home sale. Another important thing of doing real estate is selling the home and getting that $500,000 gain exclusion from taxes, from taxable income. So if you have a primary home, you can exclude up to $500,000 if you're married filing joint, provided you have owned and used the home in 2 out of 5 years. So that means if you keep buying home and staying in that home every 2 years, after every 2 years, you can get a gain exclusion. Of course, you have to shift from one home to another home, but that's what people do here also. You take the advantage of $500,000 gain. Is that gain applies to rental properties? No. Rental property is rental income, investment. It applies only to primary home. So advantage of buying a home is also the home sale exclusion. What happens if you have a primary home and then you put it on rental? And after 2 years, you move back to that primary home. You still can qualify for this $500,000 exclusion. But if you, let's say you're living in a primary home and you convert to residential, to rental, you get 3 years time from the time you put the property on rent. 3 years time. Within 3 years, if you sell that primary home, you still get the exclusion of $500,000. $500,000 means federal rate 50 to 20%. California is at least 8 to 10%. You're saving 30% on $500,000. Is how much? 30% of $500,000 is $150K. So it is a valid deduction once you plan this thing properly. If it's a rental and you want to, after it's a rental property and you want to go back and start staying in that home, of course you can take that tax benefit too. Then we have some kind of credits also available, energy efficient home improvement credits. Then we residential energy credit, like you have solar, you can install solar on your home, primary home or rental home too. So if you install solar, you can get a deduction up to 26%, not deduction, credit. What is different between deduction and credit? Deduction lowers your taxable income. Tax credit lowers your taxes dollar to dollar. Dollar to dollar. So that's important from that point of view. Then always we keep saying, how can you buy real estate? You can buy real estate from your own pocket, from your savings. You can borrow money from your line of credit, right? You can borrow from your 401k. You can do self-directed one. You know what is self-directed? Self-directed Roth, self-directed 401k. You can use that to diversify your portfolio into different areas. So, like I said, when you own a real estate and you put it on rent, you can deduct all these expenses. But if you are a real estate professional, means you are making this as a business, you're converting from passive to active, you can also deduct other expenses too, like advertising, right? You can deduct advertising, office space, business equipment, you can buy laptops, you can buy office furniture in your home, you can deduct all those things, provided you make the real estate as your business, okay? So that's an important area. Depreciation, I just covered that. Depreciation is a very, very, very important part of, because it's a paper expense. You don't do nothing to get that expense. And that expense lowers your taxable income. It creates losses also. The losses can be used against your W2 income, provided you are a real estate professional. Or you have a short-term rental. You don't have to qualify as a real estate professional if you are doing a short-term rental. If you are a short-term rental, we will cover that because it's an important topic. Then we have QBI, Qualified Business Income Deduction, also there for real estate. If you are a real estate professional, 20% of income from real estate will not be subject to taxes. But there are qualifications. You need to put more than 250 hours, not 750 hours. For real estate professionals, we need 750 hours. For this, you need only 250 hours, counting you and your spouse, including all the other people managing the real estate. It's easier to qualify. But there are limitations on the deduction, not only from the hour side, but also from the income side. Your income, total taxable income, should not exceed, verifying joint, about 350K. But if you exceed 350K and you're a real estate professional, you still get some deduction of QBI, Qualified Business Income Deduction. Again, it's done by President Trump because he is a real estate professional. Whatever he did towards real estate. So that's a QBI deduction also there. Now, if you are a real estate professional or you manage real estate, you don't pay FICA tax. What is FICA tax? Social Security, Medicare. How many of you look at your W2 and say, I pay too much taxes? It's 40%, it's 50%, it's 60%. But you don't count the Social Security and Medicare tax. That's not taxes. Of course, it's part of your money is taken out from you and paid to someone else, Social Security. But that's part of the game. So what we are looking here is federal taxes and state taxes. What is FICA tax? It's a payroll, Social Security and Medicare. So if you are a real estate professional or you manage real estate, it goes on the Schedule E of the return. And if the net income is positive, you're not subject to self-employment tax. Of course, you have to pay taxes, income tax. So there are two types of taxes, income tax and self-employment tax. You can still have to pay income tax on all the income that you earn, but not self-employment tax. So becoming a real estate professional, becoming a real estate investor makes sense. Then we have, of course, real estate also have that advantage of short-term gain and long-term gain. What is short-term? If you keep the property for more than a year, less than a year, it's a short-term. But who wants to sell the property within a year? Mostly it's long-term. If it is short-term, you pay the tax at the ordinary tax rate, which is your bracket. If it's a long-term, you pay 15 to 20% for federal. Of course, California, you pay there's only one tax for California, it's ordinary tax. Okay? So you still pay that. But federal, 15 to 20%, you might be a bracket of 35% for federal. And now you're owning that real estate, you're only paying 15 to 20%. See the difference. See the difference of buying real estate, investing in real estate. See the difference in that one. Then we have, so one way to, when you have a home, primary home, and you're selling that home, you get $500,000 exclusion. What about the rental properties? You might have appreciated value in that rental properties, and you want to sell it. You want to cash that out. Is there a way? Of course you can defer the taxes on that. This is known as 1031 exchange. 1031 exchange is the way to defer your taxes from the sale of the appreciated rental properties into another property, into another like-kind property within a period of 6 months. There are two important things there, 45 days and 180 days. Means you need to identify the new property within 45 days from the date of the selling of the old property, and you need to close the new property within a period of 180 days. 180 days. If you do that, you can defer the taxes. What happens? Can it become tax-free? Of course it can become tax-free. How? You keep buying and selling property, doing the 1031 exchange, and you put on the will. And after your death, your beneficiary takes tax-free. Value of the property, which you never pay taxes during your lifetime, but you're going to say, your beneficiary is going to get the real estate tax-free. So excellent strategy. 1031 exchange is an excellent strategy for doing sale of appreciated rental property or investment property. Now people do ask me, what is investment property? What do you mean by investment? So rental property we know, you're getting rental income. What about investment? You buy land, or you buy property, and you upgrade that property. Right? You upgrade that property. And you sell it. You don't want to get the rental income. You want to get the appreciation. So that becomes an investment property. Land, for example, people buy land. People buy land from India, like people have property, land always in India. But they can't buy land here, but they want to buy land here. If you buy land and you sell that after land at appreciated value, then it becomes, you can sell the land and buy another land. Within, like I said, 45 days and 180-day rule, you can defer the gain. Then there is one important thing that happened with Tax Cuts and Jobs Act. It's known as opportunity zone. Opportunity zone funds. What is opportunity zone? Opportunity zone means whatever gain you have from the sale of the property, can be primary home, it can be rental home, it can be investment home, anything and everything, any gain from the sale of that one, if you put it in the opportunity zone funds, within 6 months from date of sale, within 6 months, the tax will be deferred for 10 years. Tax can be deferred for 10 years. Right now, they are expiring in the year 2026. That means you have to pay tax in 2026 if the government does not extend it. But we always hope that it's going to be extended. But even then, if today you are selling that property and you're paying taxes 2 years later, still it makes sense. But the important thing with opportunity zone funds is the growth in those funds. The growth in those funds is tax-free. It's tax-free income, like a Roth IRA. It's a tax-free income. Okay? So opposite zone funds, where will you find opposite zone funds? You can Google online and find out there are a lot of properties which are under opposite zone. And please look into that. That's an important area of saving. Short-term rental, we keep talking about short-term rental. Like I said, in short-term rental, is it different from long-term rental? What way? Long-term rental is the customer, your tenant, can stay more than 7 days, average out, in a year. In short-term rental, the tenant will not be staying more than 7 days. Should be less than 7 days in a year. Every customer, every client. And you maintain that unit as a hotel unit. What do you mean by hotel unit? When you go to a hotel, you know the rooms get cleaned up every day. All the blankets, everything are cleaned up. The toilets and everything are clean. So you have to maintain that one in that style. Okay? And you put here the hours is 100 hours only. Not 750, not 250, only 100 hours. Even if you buy today the real estate, you can prove till December 31st, you put 100 hours. So, short-term rental is, you don't need to be qualified as a real estate professional. You don't have to study. You can put more than 100 hours. You can maintain that, you have to maintain that unit as a hotel unit because you have to provide services to maintain that, not somebody else providing services. Of course, you can have plumbers, you can have cleaning person coming in. All those things are there, but you manage that. If you do manage that one, it becomes a short-term rental. And once you become a short-term rental, the most important advantage is you can use the depreciation. Like I told you, on the property, which create losses, the losses can be used to offset your income. You might be 30% bracket, it might be 40% bracket. Now if that losses, to save you 30 to 40% of income. So short-term rentals are very important. But like I said, the 100 hours requirement is there, 100 or more hours. When using 100 hours or more, it should be 100 hours more than any other individual involved in that real estate, in that unit. Okay? So rotate out cleaners, subcontractors, so that no single person can spend more time on that unit. What hours count? What is your hour count towards 100 hours? All this, cleaning the unit yourself, coordinating cleaning crew and contractors, collecting rents, taking photos of the rental listings, directly communicating with guests, posting listing on the rental forms, rental Airbnb, physically walking through property for inspection purpose, okay? Performing repairs and maintenance on property yourself. So you can see how easily you can qualify for short-term rental. But the question here comes here, is it easy to find short-term rental? The answer is no. Like you, there are a lot of people in line for buying short-term rentals. First of all, you get higher prices. Then there is HOA requirements, if you see in a complex. Then HOA place a lot of restrictions. So yes, it comes with problems, but hey, save taxes, provided you do it in the right manner. And you can utilize the both spouses can work on the property, like I said, 100 hours will count towards that. And then this is the one more strategy for short-term rental, don't hire manager. You can do yourself, you need to do yourself. Okay? And there's a lot of things here also there. So when you buy real estate, the important thing that comes is to protect the real estate. What does protection means? You don't want to pay, if you get sued by who? It can be sued by the tenant. Somebody falls on the property. They can charge you millions of dollars based on loss of income, loss of profit. And that liability can go to your personal assets. Okay? How to counter that? We have 4 layers of asset protection. What are those 4 layers? First, have an LLC. When you have an LLC, does not mean that it's a business. LLC is not a business. LLC is only for protection. It does not change anything other than protection, asset protection. It's a great asset protection technique, bottom line. But you cannot create, I've seen a lot of people come with LLCs, they are attorneys. I don't see any attorney here, right? There's no attorney here. So other than estate planning attorney, that's my friend.
No, we have an immigration attorney.
Immigration attorney. So this is more corporate attorney. Anyway, so attorney always say form LLC. In Delaware, form in this other state, Wyoming, form in this, form in that. The LLC, if you have to form LLC, you have to form LLC in the state in which property is located. If you buy a property in Arizona, or you buy a property in North Carolina, or buy a property in Texas, you don't get LLC in California. You get LLC where the property is located. Because you want that state protection against any liabilities. If you don't have that LLC in that state, you don't get the state protection, and then you have to go to federal court. Federal court is very expensive, 4 to 5 times, maybe more. Getting an attorney to do your stuff is very expensive. Between $400 an hour to $750 an hour to $1,000 an hour, you can go anywhere. You go anywhere. So it's important that LLC, so these 4 layers, management company, have a management company, set up the LLC, right? Third, take an umbrella policy. Do take umbrella policy for your personal assets. That's a gap policy, we call it. And how much you can take, you should take umbrella policy? 3 to 4 times the value of your total asset. Total asset. And it's cheap, I'm telling you. Umbrella policy is not costly. It's cheap. It gives you, it clears your headaches, stress-free life. So buy the umbrella policy. And last but not the least, create a trust. Create a will. In COVID, a lot of people did not create a will. Right? And they unfortunately died. And nothing, the attorneys had to do their job. Of course, it charges money. Probate, you have to go to the court, have to probate, and pay the fees. So, now so there are a lot of strategies which are involved in real estate, which if I start talking, it will take the full day. But if you are owning real estate, managing real estate, you have to do two things. One, you form an LLC for asset protection, and you can form S corporation for managing the real estate. In that S corporation, you can have your kids there. You can have your spouse there. And that spouse and kids can get income. It becomes a deduction. And which becomes a deduction, that income to the kid, you can put in traditional IRA or Roth IRA and save taxes. So you can create that one. You can do your own management company, sole proprietor. You can hire kids, kids' age can be less than, it has to be more than 12. But after that, yes, you can hire kids who like to go to you, right? Even see, I see kids here sitting with you guys. So they want to sit in the car, they would like to go around the property, take pictures. And you can deduct that too. So there are a lot of ways you can save taxes. There are a lot of ways of saving taxes. The only thing is we should know about it. We should talk to the real estate professional. We should talk to the tax professional. And that you're just not doing taxes on TurboTax. That will not help you. That will not plan your things. If you really want to save taxes, want to plan for the future, yes, you need a CPA. You need an accountant to do your stuff, to plan your stuff. It's not just doing TurboTax. We do at the end. We have like 4 days, 5 days. We look at the W2s. We just put inside the W2, and we are done. That's not planning. That's paying taxes. Who wants to pay taxes? I don't want to pay taxes. So when people say, I don't know how to save taxes, I'm always surprised and shocked. Do they have the right education? Do they have the right experience? Or are they dealing with the right person who's planning those things? It's so critical. People form, instead of LLC, they form S corporation. When they form S corporation, the real estate is not valuable. You pay a lot of taxes just because you form the wrong entity. And just because your CPA told you to do that. So guys, I can tell you, you can save lots of taxes when buying real estate, when selling real estate, but you have to do the right way. That was my point of discussion here. Now any questions, anything? Now I am open to questions.
This was excellent. Thank you very much. On the LLCs to kind of protect your liability, like you mentioned, if you have multiple properties, are you going to create one for each?
Yes, very good question. So a lot of people do ask me this. I have multiple properties. Should I create LLC for each property? Well, it all depends upon the equity in the home. What is equity in the home? Equity equal to down payment plus appreciation. If the equity in the home plus appreciation exceed $250,000, but the state planning attorney is looking at it, but I'm just saying from tax point of view. So if it exceeds $250,000, then is a need to form an LLC. Okay? Otherwise, it's okay. So if you have if the appreciation and the down payment is less than $250K, you don't have to create. Because if you create LLC, you pay $800 franchise tax. Then you have to pay the CPA for doing taxes, right? And when you want to refinance, you have to do a quick claim deed, put the property back, should not be telling your lender, all those things. So it depends. But like I said, the equity is very important question. Okay, thank you. Yes.
So 500K benefit for selling the house. Is it I need to stay there in the last 2 years or any?
Last 2 years or 5 years.
Last 2 years or 5 years?
Yeah, or any 2 years of the 5 years.
Okay. So
It can be first, second, third, fourth, fifth year is rented out.
Yeah.
Yes, that's okay. Or second, third, or third, fourth. But any 2 years, any 2 years.
2 years consecutive.
In a block of 5 years. Yes, sir.
As a non-real estate professional, can you deduct capital loss for a rental property?
Non-real estate professional, can you deduct the losses? No, I just said, if you are a real estate professional or you're doing short-term rental, you can deduct the losses. But you don't lose the benefit because the losses is carried forward. When you sell the property, the losses will be used to offset the gain. And still the losses are more, that balance losses can be used to offset your capital income. That time. So still there is a tax benefit. Still there is we call it a tax loophole. They are looking at it, but they have not done anything.
Thank you.
Yes, any other question? Yeah.
Can you be a real estate professional and still maintain your W-2?
Oh, why not? Why not? You can do anything in this country. You can do 2 jobs, you can do 3 jobs, you can do real estate, you can do anything. There is no stopping you from doing the real estate because it's a different activity than your W2 income, than what you do on W2. Yes, any other question?
On short-term rental, for whatever losses you have in short-term rental, are you able to actually apply to that like your regular income from your regular?
Oh, of course. That's why the advantage of short-term rental. You don't have to be real estate professional. Only requirement is you have to put in more than 100 hours. All right, and you should maintain it as a unit, as a hotel unit. Means you have to provide all the service. That's pretty much it.
So is like having LLC is a must for that tax reduction?
Again, LLC is for asset protection. Again, depends upon the equity in the home. If equity is greater, well, yeah, asset protection. Yes, you can. No, not retroactive, but you can do the quick claim deed and you can transfer the title. You can transfer the title to the LLC. Quick claim deed is very simple. You can go online. Yeah.
So I have 2 questions. First thing is like you said, like if we have like real estate properties in different states, then we need to put LLC in different states. So is it like an advantage to take in different states or just stick to California?
No, don't do California. No, never. This is the only way you can escape California. If you buy properties in different states, don't put California LLC. I just said, form the LLC in the state in which the property is located. Okay? And don't form LLC just because you bought a property in Texas, or you bought a property in North Carolina, you bought a property in Arizona, or bought property there. The qualifying standard is how much appreciation and you want to protect in that property. Then you need LLC. Otherwise, no need. Management company can do that.
So a following question. So is there an advantage of like forming a LLC if we are still in we are not making any money, like we are in
Of course,
losses.
LIC is for asset protection. It's not based on whether you make money or lose money. It's for
So, but we
protecting
don't
the
get
asset.
any like monetary benefit, right?
No monetary benefit. It's for asset
Unless
protection.
we make money from the investment.
Unless you become a real estate professional, then LLC can serve as a business. Then you can deduct your travel expense, telephone expense, home office deduction, meals entertainment. Once you become a real estate professional,
That's like just contributing some 50 hours.
yeah, 50 hours. And you can do a retirement plan if you become a real estate professional, 401k, EB plan. Yes, sir.
See, I own a home and I also have my own company. So can I put part of that home as a...
Home office.
Yes, yes.
Yeah, of course. Even though your company might have a rental of space, you might be operating from a rental office, it can still be used, your home office, for administrative purposes.
Okay.
So make sure you demarcate that area from the personal usage and business usage. So take a picture of the property, of the area, don't put any personal items, take a picture of that one. You can deduct 10 to 15% of mortgage interest, 10 to 15% of your property taxes, 10 to 15% of your repairs and maintenance. You can do all those things.
And also for my company as a self-employed, can I claim the gym membership as an expense?
From your business?
Yes, yes.
No, not allowed. Unfortunately, clubs and sports, not allowed. They want people to make money, they don't want people to be healthy. Unfortunately.
If you have mortgage, we cannot transfer it to a LLC, right? Because the
So you
company
should
is
never tell the lender that you have done that.
Okay.
LLC is a non-existent entity, means it's created created with the secretary, the state, but it's not existent. So you should not tell the bankers that you formed LLC.
So we can do
The
quick
lenders,
claim.
they just care about their payment.
Right.
If you keep paying on time, of course, there's a due call on the loan. If they find out you change the ownership, but that's fine. Everybody knows it. Everybody does it. So it's not new.
The definition of real estate professional is 750 hours you spend on the property management, but also you should
Not
have
one property. If you have multiple properties, it can be grouped together as one unit
and also you have to have a real estate license also.
for real estate professional.
License.
Unless you are short-term rental, then you don't need a real estate license.
Okay.
Passing the real estate exam is not tough. I don't want to downgrade the value of the real estate. I'm saying.
So if you have Sanjiv, I'm listening to it.
I have to take care of my taxes, right?
So if you have umbrella, why do you need LLC?
You need umbrella, why you need LLC?
For the rental.
It's a four layers of protection. So what happens if something goes wrong, your umbrella policy is not enough, right? You want to limit the liability to what you have inside that property in that LLC. You don't want to go to personal.
But
So
if you have enough umbrella to cover,
then it's fine.
Then you don't
It's
need
fine.
LLC.
You don't need LLC. Why you want to pay $800 to a CPA for preparing your taxes? Yeah.
Borrowing from 401k or borrowing against 401k?
Okay, so that's a good one. So borrowing from 401k, you can borrow up to $50,000 or 50%, whichever is higher. You can borrow money from 401k, but I will suggest instead of borrowing money from 401k, do the HELOC loan, line of credit, from your appreciated family home. Do that HELOC loan and use that money to buy real estate, rental properties and investment properties. If you do that, the interest expense on the HELOC loan will be deductible against the rental income. So it's very important strategy. So borrowing, I will suggest take the HELOC loan, but you can borrow from 401k also, $50,000 or 50% of the balance, whichever is lower.
And what time duration you have to pay it back?
So it depends upon your job, your employer. If you leave the job, you have to pay it back. If you don't, it's treated as a distribution. And you're going to subject to taxes and penalties. Any more question? You have time or?
I think we have.
Yeah.
If you have any follow-up questions, Sanjiv ji will be still here.
Yeah.
You can talk to him personally. Thank you, Sanjiv ji.